Bring in our second management for the day. Sagility is the company in focus. Ramesh Gopalan is Managing Director and Group CEO of the company. By the way, the stock is one of the big gainers today. It's the number one volume-led gainer on the NSE. I think about 55. Three things we'll talk about with Sagility. So is the EBITDA margin expansion sustainable? As question number one, literally, will H2 FY26 growth be better than the first half? And finally, synergies from the BroadPath acquisition. Thanks once again for joining us on the program to talk about the numbers, Mr. Gopalan. In the first quarter, Mr. Gopalan, you had maintained a 20% revenue growth guidance for FY26, including BroadPath. Given the strong first half performance, are you likely, do you want to revise that number upwards, or will you stick with 20%? And also, second part, once you've answered the first bit, any impact on client spending or project timelines in the near term because of all these uncertainties, especially in the US?
Thank you. Thank you for having me on your show. Yes, we did revise our guidance in the earnings call last evening, right? So given the strong momentum that we are seeing, we think we will do a constant currency growth of 21% or more. The first half has been very strong for us. And we continue to see that momentum into the second half as well. On your question on the market, yes, the marketplace is changing. There's a lot of turbulence in the market. But then the core value proposition that we take to clients is one of cost takeout and help them improve their profitability. So that's exactly what clients are looking for. And so as our clients go through their profitability pressures, companies like us can do a lot to help them. And that's what gives us the confidence that the second half will continue to be as robust as the first half.
Mr. Gopalan, hi, sir. Your margin, EBITDA margin, I think has come to now almost 25%, right? At the end of this quarter, which is remarkable. What specifically is driving the margin? And is it some seasonal factor, one-off factor, or maybe one deal win? Or is it more sustainable and more structural in nature?
See, our EBITDA margins were always high. We were doing anywhere between 24 and 25 even in the past. When we acquired BroadPath, BroadPath had a much lower margin profile than us. And so we had given a guidance towards lower EBITDA numbers for FY26. However, our operations have been pretty robust. Main reason is, as we are using technology to transform operations, a large part of those benefits go to our clients, but that could be accretive to our margins as well. So it's a question of how we deploy these efficiency levers and how much do we pass on to clients and how much we can retain for ourselves. So the slight uptick in the margins that you're seeing is essentially coming from strong operations and use of technology to transform client operations.
And do you expect this to get better in the second half? Where do you see exit margins by the end of the year?
See, we had guided to around 24% at the start of the year. Yeah. After the first quarter, we said we'd be north of 24. Right now, we are guiding to a 25% margin for the full year. So second half will be similar to the first half. Ours is a seasonal business. So Q3 has seasonality, and a large part of these execution comes from the US, which is at a lower margin profile than other geographies. So it'll kind of even out. But for the full year, we are guiding to more of the same 25% EBITDA margins.
Right. If you could give us a sense further on the kind of investments that you'll be making in AI and any sort of M&A plans that you have, any gaps which you believe that can be filled through M&A, anything that you're talking about?
Constantly, we are evaluating opportunities on the M&A side, right? So as we've said before, for us, M&A achieves or M&A is expected to achieve two objectives. One, how do we grow our capabilities? We have a lot of domain expertise. We are investing organically in technology. But there are obviously areas where if you find an attractive target which can give us that quick build of capability, we would be interested. And the other objective of M&A is to increase our market access. As we've stated in the past, expanding into the mid-market and the small market has been a stated objective of ours. And so BroadPath, for instance, we acquired BroadPath because it gave us access to a large number of clients in the mid and small space. If we find other similar opportunities, we would be interested in doing. So we are constantly on the lookout, but subject to valuations that meet our criteria, we'd be happy to do an M&A.
The promoters were looking to pare their stake. They had pared their stake as well from, 82% to close to around 67%. The OFS that came in at around for 15%. Is there more, or is that done for now?
Look, I can't speak on behalf of the promoters. So yeah, like you said, promoters still own 67%. So how and when they dilute their stake is entirely up to them. So I can't comment on the time frame.
But is something on the cards?
Not that I know of.
Okay. Mr. Gopalan, the proposed or the attempts to reform US healthcare and is going in lots of different directions under the not so new health secretary. Is that going to, is there any strain there which impacts your business in the shape and form it's being proposed?
You're right. I mean, there's lots of changes happening. As you know, the one big, beautiful bill had a lot of implications towards some segments of the healthcare business, like Medicaid. So there are lots of puts and takes. But our value proposition, like I said, is to help improve efficiency of healthcare operations. And so all of these changes at some level are impacting our clients. And the focus for them is how to reduce costs and how to improve their profitability. And that's where we play a big role. So while you're right in the sense all of these changes will have impacts in terms of membership growth in some areas, membership drops in other areas, we got to be nimble. We got to be willing to work with our clients to help them improve their profitability. And our strength also is our portfolio of services is quite broad. So we help clients in all facets of operations. And so depending on what the specific need of the client is, we have the expertise and we have relevant solutions that we can take to our clients.
And in the same breath, Mr. Gopalan, I don't know how much work you're actually doing on site. Just tell us that. I mean, actual feet on the street in the US, what sort of a presence do you have right now? Because on a daily basis, we wake up to news where either visas or this morning, it's all about work permits, right? So that automatic renewal of work permits, that ends from tomorrow. So you have to, apply for reauthorization. The whole documentation has to go through again. So it seems to be getting increasingly difficult to have a seamless, smooth sailing if you're operating in the US. Your thoughts on this?
Look, we operate like a true global company, right? So most of our employees in every geography that we operate are local citizens. And that's true of the US as well. Over 99% of our employees in the US are either citizens or green card holders. So we don't rely on visas. And it's, like I said, less than 1%. So none of these regulations have any direct impact on us. And we have a sizable presence in the US. And US is a very important delivery geography for us, because some of the work that we do cannot be offshored through regulation. So we have to deliver that in the US for our clients. And so we continue to look at US as a growth geography. And like I said, none of these visa-related regulations will have any impact on us.
Take that point. Thank you so much for joining in, sir, and giving us an outlook into your business. Good luck once again. The street likes those numbers. More importantly, the upped guidance as well. With that, let's give a quick note to our viewers.